The views expressed by the host or hosts in this show do not necessarily represent those of our clients, sponsors, partners, or guests and should not be considered investment advice in any way. Similarly, the views and opinions of our guests and clients do not necessarily reflect those of our hosts or our platform. Nothing shared on this platform or any other platform affiliated with us should be read and construed as constituting investment advice of any kind on the part of Insider Exchange, any of its hosts, guests, partners, or sponsors. Trading and investing carry varying levels of risk and may not be suitable for all investors. Please ensure that you fully understand the risks and take appropriate care to manage your risk. We strongly advise that you obtain independent financial, legal, and tax advice from regulated professionals and institutions before proceeding with investment decisions. Spooky. I can't believe people would do this.
Rip us off.
Yeah, in this day and age. Day and age, I can't believe people would do this. But that's where we're going to start the show today. We're just going to jump straight into it. We have just discovered that we are finally famous enough to be impersonated. Mm-hmm. Yes, folks, that's right. The Insider Exchange TikTok account has a dupe, I want to say much less professional dupe, but it is all our content. We're in the process of reporting that. So, folks, if you see the account, please report it on your side. It is Insider Exchange with a second E after the exchange at the end, which is just lazy. It's got a certain number of followers. It's literally a replica of our account. Absolutely unacceptable. Please report it, folks, if you see it out there. We're doing that on our side. In fact, I have done it twice. Shout out to our production team who picked this up, who let us know about what is happening. We've got an awesome production team behind the scenes that helps us put the show together, and they weren't happy that someone was trying to rip off the show, and neither are we, right? But nevertheless, let's get into the rest of the show. Let's kick things off. Let's get the show on the road.
Unfiltered. 98 are currently collapsing.
Privilege of welcoming one of our good friends into studio.
So not even Buffett listens to Buffett. Suing China, if you know.
1 or 22 on AC, but you're not getting that at home.
And there's quite a bit to discuss.
The stock is not cheap.
The last podcast I did.
Oh, introduce me.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Welcome to the spooky season, or the spooky edition of Insider Exchange. We're going to be getting into some really spooky things. How to trade markets in extreme times of volatility. That's our deep dive. We're going to be doing some updates, and we're going to get into some really, really spooky numbers, because it's the Halloween edition. We're going to get straight into useful updates. We've got our timer going, and we're off. Update number one, the Louvre, the break-in that took place.
Yeah, no, they caught the Oaks.
They caught the Oaks. That's one of the updates. The other update was that there was a robbery that took place in France on the exact same day at another museum, and nobody took the time to care. And that's not even the best.
That's quite clever. Get your buddies to rob the Louvre. You go rob some B grade, which has probably still got Monets and Van Goghs and...
That's it. That's not the biggest news. The biggest news around the Louvre is the company that manufactures the ladder that was used, the trucking company in particular, went ahead and put up an ad or a post online. And it was in German. Oh, yes, it was in German. And translated to English, it simply reads, "When things need to be done quickly." That's the update. No more time on that.
Who knew Germans had a humor?
Sense of humor. It's a bit wicked sometimes, but it's still there. Next update that we are getting into is Scooter's Pizza is back.
Yeah.
I don't know if it's back, if it's one store, but
in Moville.
Yeah, the current owner is looking to revive the franchise after many, many, many years. Business models in the restauranting space require some real skill in South Africa, with the likes of famous brands and Spur Group as your competition. Do you think it'll work?
Ish. Well, if he localizes it, so they do their own delivery, so no Uber Eats and Mr. D and stuff like that. 39 minutes or it's free. I'd actually never had a Scooter's Pizza. Are they wood-fired or are they oven? Yeah, because I mean, they were, of course, Taste Holdings. And then when Taste bought the Domino's brand, it all went pear-shaped and they were fading them out. They also had St. Elmo's in Cape Town. Now, St. Elmo's were great pizzas because they were wood-fired pizzas. I'm keen. I'm going to give them a try. They're just down the road from us. Okay.
Next update, Nicolas Sarkozy. We might as well stick with France, stick with French things. Former president of France headed to jail last week.
The French don't play around.
They don't,
Like they are like and he does like a whole perp walk and his family and everything, etc. Fun fact, he's still appealing it. The French are like, yeah, dude, appeal from jail.
Appeal from jail. Happy for you to appeal it. Just
like we've got people who did stuff in like, I don't know, the 50s and we still haven't got them in jail.
I don't know if we're going to get this. I don't know if we should be taking a page out of this book with our own local situations, but that's a story for another day, right? Because we don't have time. We'd never have time with this segment. Right. We're off the naughty list. The grey lists, okay? Yes. Not Santa's naughty list.
Yes. So now we are black, white, what color if you're not grey? Anyway, we're good. So I think I'd already said this. We knew this was going to happen. The market was like, yeah, it came in like a minute or two before the closing auction on Friday. The rand's a few cents stronger. In the immediate, but it's a good thing. Foreigners can now look at us. So there's another list we need to now also. We need to get off the sub-investment grade.
Junk list. Oh.
We need to get off the junk list.
What a terrible list to be on. Junk status is just... And I think that's part of the issue there while we're on the junk topic is that's preventing a lot of other things from happening because now you're not getting capital inflows. Yeah. Now your rand weakness and the risk premium of the country still gets priced into that. And that's what we're going to look into in our trading volatility kind of segment in our deep dive as well, is just what to do in these market times. But it's not for this segment, it's for the next one. So tune into that one, right? Coca-Cola.
Yeah.
Coca-Cola Bottling Africa was a very unknown business for the longest time. And it's now been bought out. At least the South African business has been bought out by a different Coca-Cola business in the Swiss business. That's particularly interesting because I may or may not have had a conversation or two with the owners of Coca-Cola Bottling Africa at a previous time. We won't discuss that story for another day, right? But that's one of the most interesting buyouts that's never just hit. The company never hit mainstream. It was never listed. There was intention to list.
There was ABI. You're forgetting way back. That was Coca-Cola Bottling.
Amalgamated Beverage Industries, for those that want to know.
It was spun out of SAB.
Yes.
And then delisted. And it was a nice little investment for a while. Not for long.
Not for long.
It got delisted. No, but it is. And then it's all going to come back. So does this come back part of the Coca-Cola listing next year?
I don't know.
Because that was an English company that bought the African operations. This is a Swiss company buying the South Africa.
I'm so confused. I don't know who's going to list and who isn't.
Okay, we'll find out.
We'll find out. That's the update on that one. Cell C's missing billions. Remember we did this?
Yes, 10 billion.
Yes.
Where was it?
It's been found.
In the couch. In the couch.
Whose couch?
Not saying. Only one person has a couch big enough for 10 billion.
Yeah. Well, you're right. So the team at Chelsea came out to explain the discrepancies and the difference in accounting adjustments and how something was previously accounted for and all of it. All got very technical, apparently.
Did you understand it?
I understood it, but that's because I studied accounting and
that's
I understand
it's
a cheat code, right? So reclassification of things in line with IFRS standards, great, lovely. Still, 10 billion seems a bit excessive, no?
I would think. That's a big couch.
It's a big number, right? Big couch, big numbers. That's all we're going to say on that matter. One more update I think that we can get through. eBucks is getting harder to hit. So from 1 November, end of this week effectively, Saturday, eBucks is going to be even harder for individuals to attain higher levels because they're adjusting how they measure your success.
Yeah.
This is like a loyalty program that isn't going very well. I mean, compared to other loyalty programs out there.
I don't know. I mean, so eBucks is huge. Everyone's got it. There are people who are masters and run spreadsheets on it, etc. And they're always going to shift the goalposts. And to be clear, they're going to shift them away from you, not towards you. So my loyalty program, what's it called? You count. Same thing happened. I was level 3. Did nothing. Now I'm level 2. Whoa. This is just how they're going to roll. They're going to make it harder because they give you back less. Surely?
Fair enough. Is it as hard as the Discovery one?
Oh, no, because the Discovery one you have to exercise. Come on. Ask me the hard questions, Jimmy.
Okay, so where exercise is involved, unless it involves surfing, counts out.
And they don't count surfing.
And they don't count surfing.
And when you swim, they don't count your heartbeat because your watch doesn't record it. So, I'm out.
Surely they've got waterproof wearables these days?
No, but you just can't get the good counting.
Oh, okay, fair enough.
I don't know.
Okay, cool.
Science.
Not a thing, right? Not happening. That's useful updates. And more importantly, we have seconds to spare.
Yeah.
What do we do now?
I don't know. We've never had time to be spared before.
We've never had.
Quickly. China is making friends with Trump, or maybe the other way around, and they're going to do the TikTok deal on Thursday. We'll see.
Oh, yes. On the China update, the trip to Malaysia. Trump is now in Malaysia. Xi Jinping was in Malaysia. Cyril was in Malaysia. Everybody the same.
No one invited us.
Nobody invited us. That's useful updates. No more time. But we did have time. Getting on to our deep dive next, we're going to be diving into the interesting decisions that are made from an investor point of view and how to navigate times of heightened volatility and uncertainty. We find ourselves in some very interesting times from a market's perspective. We're going to see if we can break down some of that. Again, it won't be financial advice, but stick around for it anyway. In our deep dive this week, we are diving into market volatility and how to best navigate it. We find ourselves in very, very uncertain times, and we're going to see if we can try and make sense of how to best approach investment and trading decisions in this time. Of course, provisor, disclaimer, whatever you want to call it, this is not financial advice. Please don't say we've given you financial advice. We're not those people. That might be the other people that were impersonating us. If you don't know what we're talking about, go back to the start of the show. You'll find out. Also, please report them once again. We are on, I think, every market, Si, and perhaps we start, let's do it logically, right? Let's just kind of go eastern side of the world, come back, come into Europe, come into Africa.
So I've got some numbers here.
Yeah, I want to look at all of the markets, or as many of them as possible.
Yeah, I got markets for you, dude.
Because we're in uncharted territory everywhere.
So South Korea.
South Korea, that's where you start. Wow, okay.
Because it's 81% up year to date in dollars. Guess who's
The Kospi.
Hey, is it the Kospi?
Yes, I think the South Korean index is called the Kospi.
So fun fact, who's number 2?
South Africa. Yes!
57% up in dollars.
Yes, the Korean Composite Index is the Kospi.
Okay. Then Mexico up 42. This is all in dollars. Brazil up 38. China up 35.
This is in dollar terms.
This is in dollars.
This is
and
mad.
then little India, shame, poor little India, 2.4. Yeah, this is mad. I mean, yes. This is totes mad. And let's be clear, the Nasdaq's up 21 and the S&P's up 15.5. Those in of themselves are massively giant numbers, but the markets are just like absolutely rocking. And frankly, so there's a lot of folks. When markets do this, folks get scared and they worry and the stuff. But let's look at some others. So the UK, how's the UK doing? Oh, these are loading. Little UK. It wouldn't give me the UK. That's quite interesting.
While you're finding the UK, I've got an interesting stat.
I have lost the UK.
I've got an interesting stat about South Africa and our markets. You say we're the second best performing market in the world at the moment in dollar terms, right? I'm looking at our chart. Here's the chart. We haven't had a single red month this year. Wow. I don't think that's happened.
Wow.
No red
That
from
is the
January.
chart.
That is January.
Wow. Yeah, but here's the other thing.
Including Liberation Day. We still close the month out
I
in
can
the green.
see the canvas,
Yeah.
Liberation Day, but you closed it green.
Yeah.
It's Liberation. But here's the thing as well. So our market in ZAR is some 30-odd% higher. Okay. But I don't think people are seeing that in your portfolio, because if you remove the resi, like banks are up 5%, retailers are down 15%. This is not a broad-based rally. For us, it's a precious metal. So
Yes.
It's gold, it's PGM.
Yes.
And I would argue most people, most fund managers were underweight both at the beginning of the year and are still underweight because they're 30% of the index, 25% of the index. People are like, hey, ain't no way I want to be that much into a volatile little gold mine.
And that's why we're having this conversation, right, around how to navigate these volatile times. Because fund managers and asset managers out there have got their parameters. We're allowed a maximum exposure of one sector up to a certain point. We're allowed a maximum exposure of one country or one industry up to a certain point, right? So those risk parameters and those risk matrices, I think, is the plural for matrix. Those are embedded into how fund managers and asset managers approach things, not just in South Africa, across the board, right? In times like this, you almost want to be able to say, okay, if we're leaning in heavy on something, let's lean in, ride out the wave, but be able to pull back. And that's where someone, good friend of ours, Pietri Redling is. He's an asset manager, he's a fund manager, and he speaks about this as well. I spoke to him about this, and he said, look, it's an interesting time to be an asset manager and a portfolio manager. And if you're an active portfolio manager, that's better than being a passive portfolio manager, right? Now, that's a different ball game, right? We're not saying only go out and seek out active asset managers and portfolio managers, but in times like this, they might have outperformed the market even. They might have returned because they might have gotten into the the commodities rally early, might have gotten out at the peak, might have re-entered at this point. I saw an interesting article saying that now asset managers are starting to get back into local markets now, which again, as you say, 30% up, and you want to come in at this point.
It depends what they're buying. If they're buying banks, our banks are still cheap. If they're buying retailers,
but our banks are always cheap. South African markets are always cheap compared to global.
Our retailers have had a horror year.
Yes, they have.
So it depends what you're buying on that market. And, if you're coming in now to buy gold miners and PGM miners, you're a brave person. And to be clear, I mean, I also be double clear. I got lucky. I bought the Citrix Resi about 15 months ago, and I bought some Anglo Gold, and then I sold my Pan-Avs far too soon. But the thing is, I still think, even some active. I mean, Petri's, when he's active, I mean, Petri will go to dark corners of the internet to find returns. For most people, I think they don't. And I think, I remember chatting, and I won't name them because it gets a little bit awkward, but one of the big asset managers was all bullish gold at the beginning of the year.
Yes.
And then started reducing in mid-year because they were up, 60, 70%, because to an active fund manager, 60% in a year is a ridiculous number.
To be fair, if I was...
No, to be fair, they were doing their, but they've missed half the rally.
Yeah, but you've de-risked. So, I mean, if you think about it from an asset manager point of view, right? If my target from an annual basis is to make you 5% above inflation, call inflation at even 6%. If my target is to make you anything north of 11, 12%, I've done my job. If I'm coming in at 70%, I close out the positions and I'm done for the year. I don't have to work for the rest of the year.
Well, yes. I mean, I
could make more. I could chase more. But then it comes down to how do you chase it smartly, right? And this is why we're having the conversation. This is why you then say, okay, at 70% gains, do I then bank 60 and then let the rest fly and kind of risk only the 10% gain to see if there's further upside? How do I start to strategically manage a position that has been running? Or if a position, it's the thing we spoke about and you mentioned it, Size, things around having very close trailing stops, having very close, if the market turns, great. Last week we saw, was it last week or was it the week before? We saw a gold pullback and everybody said the rally's over. And the pullback lasted a day, maybe a day and a half.
Yeah, and we're still above 4,000. Gold still doubled in the last 12 months. You know who's not playing game this year? Bitcoin. No, Bitcoin's up 23.26%. On an average year, that will be good. It's beating the Nasdaq. It's beating the S&P. It's not beating gold at 54, and it's not beating us at 57, all in dollars.
Wow.
Yeah.
Wow. I think that contextualizes
I did
just
notice that the Bitcoin peeps were quiet. And Trump's a Bitcoin president.
Yeah, so I suspect we're still to hear from them. You know, the Bitcoin peeps around December. It's their time, hey? The December's coming. It's very much a crypto...
Although I do note that my data provider does not give me the Trump coin.
Well, your data provider probably gives you legitimate coins only. So, we got sidetracked. We started in Korea. We were looking for London. We got sidetracked. So let's look at developed markets, the big ones. So what have we got? So actually, Si, before we look at developed markets, we're going to take a snack break. We'll be right back, folks. Just as life needs fresh. And we're back from our snack break. Can't tell you who it's courtesy of because they're not sponsoring the segment, but maybe they will. Maybe they will. We continue. Developed markets.
So developed markets, just again, in dollars, all of it, we're up 57%. But so top of the developed markets is Germany, 33%. Then, I know.
That's bizarre.
No, they've got that big Reidenhouden bomb maker. I don't know what they're called. Reichen something, yeah.
And they do supply useful equipment towards museum heists if you're looking for anything in that range. As you were saying.
The UK at 28.8. Yeah, the UK. What colour is that? France at 28.6. France.
Pre the Louvre break-in.
No, this includes the Louvre break-in. Japan up 24%. And then what's that? Australia up 15.
Ooh.
Which it's ahead of the S&P by 0.19.
Okay. Well, the S&P is going to argue that we have 500 companies and not 40 like
No, Australia, the ASX is a 200 index. But I hear you. But I mean, the point being, it's been an epic year all around. And let's go back and think about, for example, Liberation Day, tariffs. Let's think about all the chaos. chaos. Let's think about the inability to move things around the world because of tariffs, etc., or the chaos, wars in the Middle East and Europe, and yet here we are. And the thing is with bull markets is they always get to a point where they start to feel uncomfortable, and your job is to ignore that, because of course they start to feel uncomfortable, but that doesn't mean that they're even slightly warming up. I was chatting with someone over the weekend. How far can this go? I don't know, but I mean higher. I mean, how much higher? A lot higher, maybe. I mean, I have no idea how much farther it can go, but don't fight it. Don't go. I mean, I know people who went to cash like in July and they're waiting for the collapse. I know people who are shorting this thing every day and they're just losing money. The stuff's going up.
We know someone who's short the market, and everybody knows this someone, or most people should know this someone. He's the gentleman who called the 2008 housing crisis in the United States in the form of Michael Burry.
Sure.
He's gone and taken out massive short positions. But again, if you're Michael Burry, you better be prepared to hold as long as he is.
Yeah.
He held for a long time. Those that don't remember the reference, that don't understand what I'm speaking about, there's a fantastic little movie somewhere on the internet called Margin Call. One of the best movies
I think
ever.
the best. Yeah. I hear you. But there's always big name people. Terry Pritchett, not Pritchett, that's the author. The one man who did the Elliott Wave Man. I mean, he's been shorting this market since 2001. Now, he was right for a short while. I mean, there are always going to be bears, and there's always going to be an argument to short it. But the biggest argument is always just price action. You know what the most bullish thing in the world is? New all-time highs. Why? Because someone paid prices that no one's ever paid before. That is bullish. No one walks into the local Ferrari dealership and says, I want that car, but I want to pay more than anyone. No, you go and you negotiate a discount down. Bullish markets are the most bullish thing just by their very nature. Now, to be clear, one day they're going to collapse. The other side of the coin is that they always collapse the last thing you expect. Although the housing crisis in 08, 09, there were people who'd been talking about
mortgages
that.
In the US.
Yeah,
all of
I
that.
had a friend who'd been talking about it since 2003. When it finally happened, he had no money left to make money because he'd been shorting the whole way up. Something will come from left field or right field or some field and like whack the heck out of stuff. But until so, make money.
And to be clear, when we talk about things like price action, I know there's a lot of people out there, traders and people that go onto charts and say that they're traders, that say, oh, but the market must turn here, must do this, right? That's not the price action Simon is referring to. Because let's be clear, if you're a technical analyst and you're looking at a chart and a market chooses not to respect your levels, it's because you don't decide the market. The market decides the market. You don't.
Green months in a row.
Yes, that tells you something. That tells you that some of the things that you know from your technical analysis training and all of that have gone out the window. There's a lot of things that can tell you that this has gone out the window.
Yeah. So the last time we had, here's actually a fun fact. So the 2004 6-7 rally, even that didn't have, there we go. 1, 2, 3, 4, 5, 6, 7, 8, 9. So that rally had 10 months in a row. But I can't find any other rallies that had 10 months in a row.
So we are in uncharted territory on most markets, right? We've never been at $4,000 a finance on the gold price. We've never been at 100,000 points on the top 40, above 110,000 points on the all share, the all Z. We've never had the South Korean market be the best performing market of all markets in the world, right? So we're very much in a space where you need to understand that in as much as you are trying to figure out the market, other individuals are trying to figure out the market as well.
Yes.
And other individuals being institutional level investors as well. There are smart people out there that are looking at this market saying it's going to crash, and every time they say that, it goes further in the opposite direction. So even they're getting it wrong. And I guess this is where, from a volatility perspective, a trading perspective, an investment perspective, a decision-making perspective, risk management becomes essential.
Sure.
You take the decision, do I go in, all in? Do I come out? You have to, this is where it's the most important to understand what your risk is on the table, what your potential upside could be, and basically, is it worth it for you?
Yeah, I hear you. I would caution around getting too thrilled in to have piles of cash. I mean, I have very little cash in my portfolio right now. Why? Because it's at highs.
It's at use.
Yeah, at highs.
Putting it to use.
Yeah, at highs, I like to use it. I've taken some profits in places, in all cases too early, Pan and Anglo Gold Ashanti. I've still got some A&Gs left. But the panic, tricks I was meeting a few weeks ago who've been 50% cash since July. And like, when does this crash? I'm like, look, I can promise you a crash. No idea.
Warren Buffett was in cash. He's had $300+ billion in cash.
Although there's a fun fact about that, which someone actually chirped on the weekend. It's like what's missing about the fact that Buffett has more cash than he's ever had in his life, in his portfolio, is that they've also never been $1 trillion stock before.
There we go.
So they're at record highs, they got record cash, well then the two are like just meh.
There we go, right? So again, contextualize what's happening and contextualize the decisions that are being made. And for someone like that, perhaps cash is a good strategy at this point because, yes, Sai's got his cash invested. Perhaps Warren Buffett is looking for undervalued stocks that are at a ridiculous discount to pile into for the next upward movement.
Yeah.
Right?
And he also needs, like I can go and buy little
or to
things.
short the markets.
Yeah, I can buy little things. He can't.
There we go, right? And yes, Warren Buffett's investment thesis has never been to short markets. It's always been one directional, and that's great. He's set to retire at some point in life.
End of the year.
And Berkshire Hathaway is in a good space, right? Now, again, whether or not that cash is being used or not is for that portfolio manager and that asset manager and that shareholder to decide. For you, managing your portfolio and your decisions has to be contextual to you.
Yeah, but don't be scared of highs. It was the biggest mistake I made in the early 2000s after the dot-com. I stayed bearish for far too long when the evidence was quite simply to be bullish. And what I mean by evidence? Well, market was going up and there was little Simon in his little roundhouse in Botha's Hill saying, not on my watch, except on my watch.
Except on your watch. That's where we're going to leave the deep dive, folks. Remember, this was not investing advice, but we hope it's provided a bit more color around how to approach markets in times of increased volatility. We're going to get into our Make It Make Sense because the numbers are not making sense. Stick around for that. And we're wrapping up the show, the spooky edition of Insider Exchange, with some very spooky numbers. Sai, I'm going to kick you off, lightly. I say lightly, but this is really probably going to be the number that vexes you the most out of all the numbers we've looked at today. The industry turnover for 2024-2025 of South Africa's gaming and betting landscape.
Oh no, I'm sad already.
Would you like to take a gander at what the number is? Turnover we're referring to here. So obviously not profitability and all those other things. And it's looking at gaming, betting, online gambling, that whole industry as a whole.
For the country.
For the country of the Republic of South Africa.
$1 trillion.
Okay.
ZAR.
$1 trillion ZAR. Okay. That would...
What's that? January.
You aren't that far off. You only need to add another 50%.
I thought you were going to say another zero. Hold on, I need to add how much?
50% to your
$1.5 trillion.
Yes. In turnover.
$100 billion a month. And then some change for Christmas.
On average, $80 billion.
Hold on, was that a dollar number?
No. The 1.5 trillion is right, is ZAR. I've just converted it back to dollars for context.
Okay.
So yes, it is projected to reach...
I could buy you like a
country, a small country.
Actually, Lesotho. Actually, Eswatini. I quite like Eswatini. Well, it hasn't got a beach. Mozambique, how much is Mozambique worth?
I don't know. We'll ask the Mozambican government. Okay, so are we making sense of the numbers?
No, we're not making sense of the numbers. It is, high horse and all, I get it. I don't gamble. I don't need to because I get my entertainment somewhere else and I get my income somewhere else. And I think for some people it is entertainment, although I think for most people it's a desire for some income. I think it is immensely dangerous. We saw the NBA last week. It turns out half their players are cons. And Hans, you can hear anyone? Like, did we not see this coming 25 years ago?
We've been leading, hey?
We have been leading. I suppose the most tragic part is that let's assume that most people here are doing this because they need to make a buck.
Yes. Well, you've got an unemployment rate north of 30-something percent. You've got a youth unemployment rate north of 50%.
Yeah. So this is someone who's got the SDR grant and $350. And it's like $350 does nothing for me. I saw a stat this weekend.
It's a reality.
The low-income people spend more than half of their money on transport and Eskom. It is the reality. So it's actually perhaps more an indictment on our government. Surprise, surprise.
There we go. No surprises there, right? That is probably as much sense as we're going to make of that, right? Let's move on to the other one. Russia-Ukraine war has been ongoing for several years at this point. It feels like it just started yesterday, but it's several years at this point. And
it's almost as long as World War I.
Really? Well, it's taking a very interesting turn at the moment. It seems as though the European Commission has put forward a plan to fight Russia with Russian money.
Oh, I like this. No, I like this. So World War I was 4 years and 4 months.
Okay, 4 years and 4 months. So we're not there yet. We've got a year to go. But
Hang on. So we take the confiscated money, which has scared everyone else. Everyone else is now buying gold because you can hide gold under your bed, but not
right.
dollars. Okay.
So $244 billion worth of Russian sovereign assets have been frozen by Europe. And now there is a plan being put forward that seeks to then redistribute about 217 billion of those foreign assets or sovereign assets. And obviously there's European laws that say that you cannot simply confiscate, or you cannot simply confiscate assets, sovereign assets in particular, of another country, and there's laws around it. But there is something that's being put forward.
To be invaded.
There is something that's being put forward here in efforts to potentially see how they can, I don't know, strong arm Russia, leverage Russia, or whatever it is. The interesting thing here comes from the fact that these assets were predominantly frozen by a Belgian bank, right? A Belgian financial institution in the form of Euroclear. They are the ones that are stalling the process of this refinancing. Now, the refinancing involves a loan to someone to be able to use the money to do other things and all that. It's all very convoluted and complicated. We might do a separate deep dive on that. But using Russian money to fight the Russia-Ukraine war is the point of the conversation. $200 billion plus worth of
So
that.
Putin really messed up. Firstly, he left his money lying on the pavement when he invaded. So
should have put it in the couch.
Yeah. And we got a couch for the man. And then secondly, it didn't take 3 days to take Kiev. So I think it's a brilliant idea. I mean, I think we should keep some of it to rebuild Ukraine post-war, but to then take some of it to then buy some missiles and to then throw them at Russia or whatever it is, drones, I don't know what these things are, tanks and stuff.
Well, you might want to hold off on that because President Putin has already promised that the response would be swift and painful if this were to happen. And he's not one to mince his words, not to the European Union, not to Donald Trump, not to anyone else for that matter.
Yeah.
But it's a bit of a weird one. Speaking of Trump, he's our final make it make sense. I'll put it in a story because really that's the only thing I can do here. Or actually more of a scenario. The president of the United States of America is intending on suing, but has for the moment, demanded $230 million from the Department of Justice of the United States of America for malicious prosecution and other things related to the previous time they pursued him.
Like when he tried to overthrow the government.
Right.
Okay, noted.
That it gets better, right? So I believe it's the judge or someone involved in the Department of Justice. I think the deputy of the Department of Justice. Let me actually just get the right title so that we have this contextualized properly. I've got the gentleman's name, so I'm just going to pull up what it is. There we are. Currently, United States Deputy Attorney General, right? Which would sit within the Department of Justice. Gentleman by the name of Todd Blanche.
Never heard of him.
Right. For those that might wonder why Todd Blanche sounds familiar, this claim against the DOJ would then be dealt with and processed by Todd and the Department of Justice. Todd, at some point prior to being appointed the United States Deputy Attorney General, used to represent Donald J. Trump.
I have to say, I grew up as a kid. No, I grew up as a kid. Of course I was a kid. I remember my mother, who was a big Kennedy fan. She would have been a youngin', a teen, when we're talking about John Kennedy, JFK. And he appointed his brother as the Attorney General. And the uproar, and my poor mother, because she loved JFK and Jackie Kennedy, but he did this horrible, corrupt thing, etc. Man, the man was an amateur. So you got to hand it to Trump. So you try and overthrow the government. You lose. You get taken to court. You get the Supreme Court to say that you're a king, so you can't be tried. And then you claim the money that you spent. Because to be clear, if the government takes me or you to court and we win, because he didn't win, he just got the Supreme Court to say you can't do anything.
There we go.
If we win, the government's not like, sorry, here's your lawyer for.
Yes.
You know, if I sue you, then yes, you can do costs.
It's a different conversation.
But not against the government. And then he goes and says he wants his 230 million back.
Yes.
Which I don't believe he spent 230 million, because I don't believe he had 230 million. And then the chap who supposedly earned the 230 million, because that was his lawyer, who's now the deputy thingy-majiggy-diggy, is going to agree to it. Man, this is taking graft and corruption to levels that if you had proposed this 2 years ago, people would have dragged you out of here as a crazy man and put you in Falkenberg for the rest of days.
To be fair, you could still impeach the president, but if you're going to do that, this particular president has survived 2 impeachments. So do it at your own discretion. Interestingly enough, on that 230 million, it is, according to the New York Times, not according to me, according to the New York Times, it is in compensation for the federal investigations into him. For the investigations, not for the emotional discomfort, not for anything, just for the fact that he was investigated.
Yeah.
230 million from the government that you are set to be in charge of.
What's the phrase? The rabbit's out the hat. What's it?
Cat's out the hat.
No,
No?
cat's out
Yeah,
the
cat's
bag.
out the bag.
Whatever.
Cat's out the bag.
I mean, it is out the bag. It is gone. It is halfway to Tokyo. But so the next administration, the next person who's looking at being a president is not. So, but I can't help thinking is that the Democrats are going to be presidents because they want to do good, and the Republicans are going to be presidents because they want to get money. And the Democrats must shine up and make money, man. Let's rip this country apart until there's nothing left except a ballroom.
Except a ballroom, which, interestingly enough, that ballroom, President Trump is spending 250 million of this government's money.
This is way more fun. So this is being funded by friends of Trump. Who are these friends? Google, Apple, Meta. Who got giant tax cuts earlier in the year from the one big, beautiful bill?
Google, Apple, Meta.
You see the grind here. You see the grind here. This is yes. Mm-hmm.
So that, for me, I found that interesting because there was clear statements that this is not going to go and affect the current structure of the White House. And there's a wrecking ball running through, I think it's the eastern lawn of the White House, the east wing of the White House at the moment, just flattening everything. But Trump made a promise that this was not going to run through that.
Remember Trump and promises. Dude, he
did promise tariffs.
You can't take that check to the bank. So remember when suddenly he wanted to release the files on Emilia Earhart, the lady who went missing. She was epic. Yeah, she was epic. She tried to fly around the world as the first solo woman, disappeared somewhere. I've read more books on it than is good for my health. And the whole world was like, Trump doesn't know. Anyway, you know that they got 130 million to pay the military, which of course is actually only $100 per military personnel member, but what the hell, from an anonymous person. And now the New York Times knows who that anonymous person is. And they're a banking billionaire and a big friend of Trump. And what's their big thing? Emilia Earhart.
Wow.
So that's where he gets his ideas from. Donors.
Okay, there's where President Trump gets his inspiration from, and that's all we have time to make sense of. Thanks for tuning in, folks. That's the show. Before we go, of course, we have to leave you with an unfiltered opinion of the week. This week's unfiltered opinion is something I've been observing for a number of years across various different spaces, right? And I don't know if you've observed this as well, but folks, especially those that either stay in gated communities or visit gated communities, even if you just have an apartment block like size, this has been something that has been a predominant theme, and I can't for the life of me understand it. And perhaps, folks, you can help me make sense of it, because my unfiltered opinion of the week is I would like the cell phone packages that security guards are on. Because they're always on the phone. It's never an SMS text. It's always a phone call. And I'm like, how much airtime do you have?
And battery.
I'm with
you. We got to have a conversation
That's
with these peeps.
Battery, airtime, all of it. Just tell us what the secret is. Give us the secret sauce. That's the unfiltered opinion of the week. Thanks for tuning in, folks. Remember, investing isn't hard. Just try it. The views expressed by the host or hosts in this show do not necessarily represent those of our clients, sponsors, partners, or guests, and should not be considered investment advice in any way. Similarly, the views and opinions of our guests and clients do not necessarily reflect those of our hosts or our platform. Nothing shared on this platform or any other platform affiliated with us should be read and construed as constituting investment advice of any kind on the part of Insider Exchange, any of its hosts, guests, partners, or sponsors. Trading and investing carry varying levels of risk and may not be suitable for all investors. Please ensure that you fully understand the risks and take appropriate care to manage your risk. We strongly advise that you obtain independent financial, legal, and tax advice from regulated professionals and institutions before proceeding with investment decisions.